Welcome, everybody. Welcome to Real Estate 360's Sunday School. My name is Jason Miles, and as always, this is an interactive thing. I'm not going to keep you long today. I understand that, there's a lot going on. It's hot all over the place. People are probably trying to kick back and chill and enjoy their day right now until, it's time to go to work tomorrow. So today I'm going to go over with you what an entry fee looks like and all of the points. There's 7 key points in an entry fee, whether it's for creative financing of, whatever, sub 2, owner financing, even a novation agreement, right? There's got to be these kind of things that you implement so you know exactly what you're doing, especially if you're wholesaling, right? If you're pitching this to someone else, it's going to be really important for you to know exactly what to do as we move through each step. So get yourself a pen and paper or tablet, however you're going to record this, whatever. I'm going to make this document available to you as well, but get yourself together and let's go to work. Being a real estate investor, there's nothing to it.
Sellers are just waiting for my call. Hey.
I'm sick and tired of y'all calling me. Stop calling my phone. I'm just sick of them. Sick.
So basically, there's no competition.
All I have to do is mail these out. Boom. Here comes the money.
Real estate. Easy money.
Hey, get away from my car.
My offers are solid, and they always get accepted.
Be nice.
As real estate investors, we make our own hours.
Now all I have to do is put in these bandit signs.
If you invest in real estate, you know exactly what you just saw. It can be problematic, right? It's the same group of people going after the same group of people saying the same thing to the same group of people. I get it. I've done it all. Some of those strategies can work, but it's all about messaging and numbers. But I'm here to tell you today that there's an absolutely better way to get things done, that you can double what you're doing. If you're a full-time investor already, you should be doing 5 to 10 deals a month. If you're not, let's have a conversation. If you're just getting started, this is the best way for you to go and get started. If you don't have any money to put into marketing and you want to develop a pipeline of deals that's consistently coming through, and you don't have to have the exact same conversation over and over and over again with another new seller. All you have to do is watch this study that I've put together for you. It's a little bit of a training, and let's have a conversation afterward. I've been at this for more than 2 decades, and we've developed strategies and relationships and systems and processes that allow our business to do 15 deals, 12 deals a month per market that we're in. And I want to share this information with you. Click the link below. Let's have a conversation. Peace. All right, welcome back. So yeah, there's a link in the description if you want to learn more. There's a free thing. We can have our strategy session and go from there. That's it's in the description if you want to know more about it, or watch more of these videos here on YouTube as well. Get to know me, see what we do, and let's see, right? So this entry fee that you hear about, a lot of people just overlook it. You'll have people that pitch you creative finance deals. Maybe they're just learning, and they're like, well, the house is $250,000, and not really sure, what they want for. We want to eliminate that altogether, right? We don't want to deal with that. We don't want to. If I put it like this, when a wholesaler or somebody brings me a deal, and I've got to go back in and rework the deal, all the numbers, basically figure out what this is, figure out what that is, figure out interest rates, figure out down payment. Is there an agent involved? What's the wholesale fee? If there is a wholesaler, and sometimes I'm the wholesaler, right? So I got to know what all these things are. And so I think it's extremely important for you to know what these things are as well. And it's simply just called an entry fee. And the more you utilize it in your business, especially if you're wholesaling, the more other people are going to be a little more willing to do work with you, because not only do you show them all the numbers, the form that I put together, it also shows the potential buyer what their 1 year ROI would be, which for most investors is really, really important. Yes, they're concerned with a long going ROI as well, but what are they going to get back of their initial investment, of their capital investment in year one? I think that's a great place for you to start if you want to go on longer and show them what that could be. But I don't really do that because, hey, what happens after the first year? Generally, rents go up or something's going to go up, right? If you're renting it out or doing a lease option, you would have structured a way for you to make more money year over year. And so that's why I only do year one, because I don't know how you're going to do your money management. But I'm going to share with you what that looks like for me, right, on ours, what I've put together. So we don't want to do that. We want to be here. Okay. So here's the entry fee form that I use, okay, that I created. Why is this important? It's important for several different reasons. Now, this is just the Excel version. You can have a PDF version. You can do whatever it is you want, right? But it's important that you have it. It's important that you can share this with the people that you're going to sell it to, right? So what I do here, and this is just a mock-up, you know, creative finance entry fee. I'll put in a picture, the address, and I'll put a link there for people to go to, right? You know, add a Google link that they can, you know, hit that Google link and it'll take them to the images, right? So we just put those things together. Now, the most important things that you need to know, here are the things that are very important for you to know. The 7 things you need to know, right? You've got your price, the down payment. Is there an agent? If there is, what's that fee? Are there any liens and arrears? You got your closing cost, any rental that needs to be done, holding cost, and wholesale fee. Now, some people won't put the holding costs in there. Some people will, you know, they just won't, right? For all kind of reasons. If you get a property that's kind of ready to go, once the person gets it, they might have one payment that they have to make. You know, maybe they've got to go in and do a little bit more and they need a couple of months, but that's totally up to them. And it's up to your discretion as well. I mean, listen, if I was buying this property, you know, in this particular case, and it was ready to go, it really didn't need anything. Maybe, you know, it needed some paint, change the lock, stuff like that. Well, I can market that property for sale or for rent or lease, while I'm painting it and changing the locks, right? I can do that. And that's exactly what I'm going to do, because I don't want to waste time. I don't want to waste a week or 2 weeks of you know, marketing to get someone in there because I got to paint it first. I'm not really interested in that. So, you know, here's basically how it works. And I'm going to just throw the numbers. I filled in some numbers here, but well, let's say wherever you are, USA, you find a house. And let's say that house is $300,000. Like, you can get it for $300,000. Okay. And maybe, oops, I'm sorry. Okay. But you can get it for $300,000. And I'm just going to get these numbers below out of here. Just because I want to give you a clean slate of something to look at, all right? All right, so now we're down to nothing. Okay, cool. We'll just go ahead and get rid of that as well. All right, so now we're down to nothing. All right, perfect. So once we've started our negotiation, and maybe we get the house for $300,000 or whatever the actual number is, right? Because there's a million different ways that you can structure these deals. But just to put it simply, let's say that the payoff amount is $290,000, right? and you can pick up this house by, for 300,000, which is really giving, the person their down payment. So I would make sure that this number reflected what that payoff is, and that payoff in this case would be $290,000, right? Well, I got 2 million there, excuse me. So it's 290,000, and this person needs 10,000 to get on to go to the next chapter of their life, right? That's what they need. Let's say they had this property listed. Now, a lot of times, the property is going to be listed, and well, not necessarily. I mean, it could be a pre-foreclosure, but we get a lot of great deals from agents, right? A lot of them. And there's a lot of people that will, list their own properties for sale as well. But just for the sake of this conversation, let's just assume that there is an agent involved. Okay, so if there's an agent involved on a $300,000 deal, the agent will be looking for their 3% commission, which in this case was what, $9,000. So I would probably be trying to have a conversation with them, especially if it's listed for a long time and I've got to do all the negotiating and explaining and so on and so forth. I would more than likely come in and say, look, let me give you a fee instead of your percentage. I'm willing to give you $5,000 on this deal. I'm doing all the work. I'm doing all the paperwork. I'm doing all the explanations. So I'm willing to give you that. Boom. Great. Okay. So in this case, let's say there are no arrearages. Well, maybe there are. Maybe there's a tax lien, and it's, $2,200. Maybe that's there. Closing costs are going to vary from wherever you are. I add insurance into my closing costs. Some people will separate that, but I add insurance into there. So my typical closing is going to cost me, it's anywhere, depends on where you are. It really does, but anywhere between maybe $3,000 and $4,000. So we'll just go to the high end there and we'll fill that out. Let's say the property is in beautiful, pristine condition. You really don't need to do anything but clean it and change the locks. I'm still going to calculate $1,000. You might put $500 in there. I don't know, but it's in great shape, right? And let's just say there's 1 month of holding cost. And what is the holding cost going to be? Well, the holding cost is going to be whatever the mortgage payment is. So in this case, let's say PITI, the payment is $2,400. And I think it's going to take us a month to clean it up and change the locks and market it simultaneously, show it, and get people out. So I think it's going to cost me the $2,400, 1 month, basically, right? But now I want to wholesale this deal off. I'm going to ask for $10,000. Now, I don't always get it. People negotiate me down. We've got to do some negotiating on a couple deals now where the wholesale fee as well as the down payment has to come down to make the numbers work. It just has to. But I put it in there anyway because that's what I'm asking for, right? And we say here that the current monthly payment is $2,400. Okay. Now, that's how much your total entry fee is right there, right? Now I know that I've got to come out of pocket $34,600 to lock this deal in. So I'm going to focus here on what my exit strategy is. I'm building the front end of this deal to wholesale it, right? Or even for myself, I want to show the best that I can possibly do to get down on this. So let's say I'm going to do a wrap or a lease option on this beautiful house. My exit price, what I like to do, I have a whole strategy called 2 Year to Millionaire. I'll share that with you at another time. But if you get it for 10% less and sell it for 10% more, right, you're building in 20% spread roughly. It works out to be a little bit more, but that's fine. But it's totally up to you how you do it. But that's how I would recommend doing it. But if you got it for way less than 10%, well, let's say you got it at 80 cents on the dollar, right? You're still going to add another 10% to it, just of what it should be selling for. So if this house should be selling, let's say this house should be selling for $325. Okay, I'm going to add another, $32,000, or in this case, I'll add $35,000 and put it out there for $360,000. I'm selling it at tomorrow's price. Does that make sense? I'm selling it at tomorrow's price because they've still got to refinance and do all that other stuff. There's a lot of things that they're going to have to do so that I can get paid. Now, if I'm wrapping it, I'm not going to get to take advantage of the depreciation, but if I'm lease optioning, I will. So keep that in mind as well. Now, if I've got a $360,000 house that I'm going to sell, what's the kind of down payment that I'm going to want? Well, I like to ask for 10%, but in this particular case, I may only get $25,000. Just being honest, right? $25,000. Now, I'm going to ask for a $4,000 a month payment. We've got a big storm going on outside here, guys. All right, so that's showing that I'm going to get a $1,600 a month profit. It shows that my first year, you'll see it right here. Here's my monthly payment. There's the profit that I get every month. That's my total entry fee, $33,600. That shows the 1 year cash on cash return is $44,200. That is a 128% cash on cash return on your money in the first year, right? That's a 1 year cash on cash return is 128%. Now, why is it important again to share that return, that cash on cash return? Well, in my opinion, it's extremely important to let people know how they're going to make money. When you're structuring your deals, the more information you can give them, the better, right? So if we've estimated that there is some work that needs to be done, they need to know that. Even though they're going to send people to look at it, they need to know that. If they want to know, well, what's the breakdown on that $2,400 a month payment? You got to be able to show them. Here's the PITI, or here's the taxes, here's the insurance. Of course, the insurance is going to change once you get it. Once you have the property, the insurance is going to change. Why? Because you're going to have non-owner occupant insurance. Now, if you are doing a wrap, that person, the buyer, your buyer, is going to have basically a homeowner's insurance policy. Okay, so they're going to be paying that. And that's just how that goes. It works into however you want to structure it. You can have it part of your note. You can have it separate from your note. It's completely up to you. The taxes are going to be what the taxes are. You can have the people pay the taxes at the end of the year, or you can have them pay it in your payment. I would tell you to make sure it's paid in the payment. That's why we're at $4,000 a month, right? So we can show that we're pulling in all of that money. Taxes are there. Insurance is there. If they're going to be paying their own insurance policy. That's fine. But this is how much you're going to get, And by, again, showing people, I know what my numbers are. My numbers are very clear. Here's the exit strategy I put in there. We've got a lease option or a wrap available to you. If you so choose to, you could, as a buyer, whoever you're selling it to might have a normal rental strategy in place, or they might have a short-term rental strategy in place. It's whatever they're going to do. But you don't want to give all of the ways they could make money. It would take you forever to do some of these. Just to do the REIA wouldn't take forever, but it would probably take you, after you get really good at it, an extra 10 or 15 minutes to figure out how much money they could make on a monthly basis from an Airbnb, let's say, or a rental, let's say, and you just put that information in there, create a couple more lines, a couple more categories, and be done. I don't think you need to work that hard. I think that the vast majority of the people are going to either be leasing these out or doing wraps. We know that people do short-term as well, but if they're doing short-term rentals, they're going to get more money anyway. Okay, so presumably, it depends on the property. It depends on a number of different things. But presumably, if they know what they're doing, if they're a good short-term operator, they will know how to maximize their potential to make money in this particular situation. However, in doing it like this, creating your entry fee form, this sheet, and if you want it again, just throw it in the comments. I'll get it out to you. I'll email it over to you, and I'll make it available. You know, I'll switch out the information in here and add a link. Maybe that'll give you the ability to download it if you want it later. But knowing how to navigate your creative finance deals is important. Knowing how to show your buyers, your potential buyers, how they can make money in these things is extremely important. Why? Because it shows them you know what you're talking about. And if they're long-term buyers, they're going to trust you a lot. Okay? If you're working a specific area and you got a group of investors that are buying properties in those areas, they're always buying, this is a great situation for you. Perfect situation for you because you're going to make money. Now, once you make some money in these, you've got to learn how to raise money and you've got to start investing in yourself with these, right? I would tell you to do 1 out of every 5 deals when you're getting started. Do 4 wholesale deals, put some money in your pocket, and do the 5th deal that comes around, provided it's a good enough deal for you to get into, right? So, and pay yourself. Pay yourself. You don't have to pay yourself a wholesale fee of $10,000. You could pay yourself $5,000. Whatever it is you want to do, however you want to play that is totally and completely up to you. Okay, but this entry fee form is absolutely utterly important. Let me just share it with you one more time here. And this is how you do it. It's very simple. So if you download this one, if you ask for this one, you can have it. But if you download this, all you have to do is change out the picture, change the address, put in your link right there for your Google images for the property. You could save this as a PDF or send it out straight as an Excel file as it is right now. Just make sure if you save it as a PDF that your links are actionable in there. That's another story for another time, another tutorial, I should say, for another time. But make sure that you're sharing this information. Make sure that you're getting this all in there, right? What do we got? 1, 2, 3, 4, 5, 6, 7. These are your 7. Down payment was 1. If there's an agent fee, that's 2. Liens and arrears, 3. Closing costs, 4. Renovation, 5. Holding costs, 6. And a wholesale fee is 7. Also on the holding costs, let me throw that in there. Some people will add a marketing expense to that. Now, depending on how you're marketing, if you're paying for a service to market it for you or whatever the case, then yes, add that into your holding cost. You really want to have that in there if you're going to be paying some service to market it for you. Me, I don't use any services, but there are services, and again, I have no dog in any of this stuff. There's like apartments.com and for sale by owner. If you're marketing your properties, they're going to want a little taste of something, some kind of a subscription or monthly, or maybe a one-time. I don't know because I don't use them, but this is what your outgoing marketing for sales of the properties that you've got. This is what you need to be doing. Now, you might not want this form. You might want to put something else together, just write it out every time. That's fine too. But you need to know these numbers. You have to know these numbers. And knowing that you can show what a potential buyer for you when you're wholesaling, or even if you're keeping it for yourself, to know what to expect in year 1, cash on cash return, hey man, that's priceless, because they don't have to sit there and kind of figure that out. And once they trust you, they'll know exactly what you're talking about. They'll know exactly what you've been giving them this whole time. So get used to it. Get used to doing this. If wherever you're watching this, drop it in the comments. If you want one, leave me your email address. If you're watching it on Facebook, just shoot me a message. If you're on YouTube, just shoot me a message. I will make this available to you for free. I'm not asking for anything. In fact, in the description here, there's a bunch of forms that you need for Subject 2 that are there. Contracts and everything you need for a deal, actually. Absolutely everything you need to hand over to your closing attorney or title company to close out your deals. Everything's there. So as I said, I'm not going to spend a bunch of time with you today. I know it's a hot, humid Sunday, depending on where you are. I know I'm hot. I was outside just a little while ago, so and came right in to do this with you. So thanks for watching. I really appreciate your time. Utilize this. Message me. I'll get this thing out to you right away. It's a very, very important document. I swear by it because I know how necessary it is to have. Okay? So don't sleep. Stay positive. Stay strong. All the formulas are in there. You can do this. This is for you. This is for you. If you're playing around with it, start taking it serious and get some money. If you're taking it serious and sometimes it takes you a little time to get going. Everybody doesn't, catch a fish on the first cast. You might have to do it a while. Be patient. Be consistent. Always learn. Add to what you know, constantly, because you never know it all. Believe me. And I'll see you on the next run. See you next week. Next week, Sunday School. I'm not sure what the topic is, but I promise you we'll have a good one. And follow me through this week. If you've got questions, go in the group, in the Facebook group. It's called the Real Estate Accelerators Group. Ask your questions, share some information, and let's fellowship, I guess that you would call it. Let's be close to one another and get some things done. This is your man, Miles. And as always, I appreciate everything you guys do. And I'll see you next week. Hey guys, it's your man Jason Miles here again. I just wanted to come to you today because I've got something great that I want to basically just kind of give you. It's my second book. It's called When There's Blood in the Streets, A Real Estate Investor's Guide to Winning. Now, this book here is all about how I found success in real estate, all the things that I did to become successful, all the things that I've taught other people over the past 17 years now about being successful in real estate. Listen, there's no lying, there's no kind of softening it up. Real estate is at a time right now where there's going to be some changes in the market, and it's not going to be enough to simply just fix and flip a house. It's going to be a little bit more difficult. So you have to implement, other strategies if you want to find success. There are passive income strategies that we do right now, lease purchase, sandwich lease options, things like that, where we're not just renting, we're creating homeowners, okay? There are fix and flip. There is wholesaling. There is a lot of other things that you can take advantage of that are in this book and kind of pinpoint exactly what it is you want to do for yourself. And again, it's free. All you have to do is fill out the information below, pay for the shipping and handling, and it's yours. It will be mailed right out to you. Now, you don't have to take it from me. All you have to do is read some of the comments and some of the videos, the shares, just things that other people are saying that I've been able to help them with as they've been building their real estate careers. And then, of course, turning around and helping other people. That's the most important thing. It's not enough for you to just have. It's got to be a situation where it's being reciprocated, where you're giving it back, right? That's what this is all about. Now, again, this is the second book that I've written, but it's just for what's going on in today's market. When there's blood in the streets, you've heard the saying. It's time for you to kind of start taking action. And you may not have a lot of money. You may not have any money. None of that matters. We're going to go over the strategies in this book. So fill out the information below. You get the book for free. Just pay for the shipping and handling, and we'll go from there. And I look forward to working with you soon. Thanks, guys. Talk to you soon. What's going on, friends and family? How y'all feeling today? I hope you're feeling great, doing well. I've had a lot of conversations over the past, I'd probably say about the past couple months, 2-3 months, about people wanting to get involved in real estate and asking how they can get involved in real estate given all that's going on with the economy. Well, you either have a lot of time, which means you don't have the money, or you have a lot of money, which means you don't have the time. And they want to know how they can get involved in real estate. Some of them have said, look, man, what do I need to do to just get into a deal, right? I don't really have the time to do all of that. So we've just invested their money in some of the deals that we do. So I'm here to open the invitation to all my friends and family that are watching this right now. If you're interested in getting involved in real estate and you simply don't have a ton of money or you don't have a ton of time, maybe you only have, $5,000, maybe you have $100,000, I don't know. But if you're interested in investing in real estate deals passively, truly passively, just reach out to me. You know, there's no link. This isn't an ad. Just DM me and let's have a conversation. We've got deals right now that we can fund. Right now, as of right now, multifamily as well as single family. Deals that you can be in as little as 6 months and as much as 2 or 3 years. Depends on the scenario and what your particular investment strategy is. All I can say is let's have a conversation. So if you're interested, friends and family, just reach out. Let's have a conversation. I'll see you later.